Welcome to the Real Estate Investor Summit podcast, coming to you straight from the smallest big town in Texas with your host, mentor, and owner financing master, Mitch, a.k.a. Be the Bank Stephen. The possibilities of life without a job start here. So grab your pen and paper and listen up. Y'all just might figure out how to fail forward to financial freedom.
This is Mitch, and we're here with the Real Estate Investor Summit podcast. I've got two guests today, and boy, are they a great team. Ari Page and Mike Banks of Fund and Grow. That's Fund and Grow. And you're going to want to pay close attention because these guys can be the key to getting your career, your business, especially your real estate career, off the ground. One of the biggest obstacles that real estate investors face when they're first starting is they just don't have any money. I can't tell you how many times I've heard that. This is a solution to that, and I'm going to tell you more about why I know about this solution. But right now, I want to introduce Ari Page and Mike Banks. How are y'all doing?
Hey, Mitch, thank you so much for having us on. This is Ari. I'm really looking forward to this today. And like you said, we have Mike here also.
Hey, Mitch, thank you so much for having us today. We're really excited to be doing this with you.
Well, it's a pleasure. By now, we're good friends because we've been doing business together for a while and sharing each other's stories. I really want to thank you for coming on because you have helped at least 90 of my coaching students with their credit issues and to find lines of credit or 0% interest credit cards that they have used to launch their career. As a matter of fact, I want to point out to the audience, Ari and Mike and their business Fund and Grow has produced over $6 million, or we're headed towards the $6 million mark for my coaching students. And boy, it really makes a difference. I mean, you don't have to have money when you start out in this business, but the sooner you can find some funding sources, the sooner you start to explode. So I want to address the first thing. I don't think people understand, Mike, just how bad credit can hurt you, and it hurts you in all different ways. If you have bad credit, you may not realize how expensive your life is because you have bad credit. Tell us some of the things that are more expensive if you have bad credit, Mike.
Well, for one, you could end up with higher insurance rates. Some of the insurance companies are going to check your credit. You could end up paying higher interest rates on your mortgages, on your auto loans, on your credit cards, really anything that has to do with a credit review. If you're not taking care of your credit, if you don't have high credit scores, you will end up paying more on all of those things. And even if you go to rent a car, in some cases, they're going to look at your credit, or your employer is going to look at your credit. So if you're looking to get into real estate investing, or you're an entrepreneur starting a business, or you're already in business, at this point, you really should start looking at your credit and take the steps you need to improve it.
Yeah, I know that even sometimes the utility companies charge bigger deposits or something if you don't have very good credit. So, and if you're a real estate investor and you're buying multiple houses and you have to pay an extra $150 or $200 every time you want to get the utilities turned on, put it out as the deposit. And of course, you real estate investors know how it goes. You don't always get all that deposit back, or it's a long time to get them back, and you have to keep track of them because no one's going to voluntarily send your stuff back, of course. So how are people using Fund and Grow? Well, let's back up. Tell us a little bit about the types of credit lines that you guys can get for people. What kind of sources?
Yeah, that's a great question because there's so many different forms of funding out there. One of the things that we do at Fund and Grow is actually help explain and teach folks the differences between corporate credit and business credit, and how does your personal credit tie into all of that. And so the loans that we generate that are most desirable by our clients is the loans that can be accessed directly as cash. And these loans are business credit cards. And so the credit card does not show up on your personal report. You do not have to pay a cash advance rate. We show our clients how to get the cash off the card. And we also are able to utilize the zero interest introductory period. It could be as long as 18 months. It could be 12 months. There are some that are as short as 6 months. But regardless of the duration of the 0% period, we all can agree getting access to credit at no interest rate, even if it is only for 12 months, it could really be amazing. And what we do is we do card stacking. So we're getting these business credit cards that are unsecured. They do not appear on your personal credit. They have a 0% introductory rate for at least 6 months, most of them 12 to 18 months. You can pull the cash off those cards and spend it anywhere in your business. And the card stacking aspect is when you're adding multiple credit lines together. When you add multiple credit lines together, then you can get the larger amounts, 200, 300,000.
Wow. So, I want to let everyone know that I did my first 100 deals on credit cards. And in my book, My Life in 1,000 Houses, Failing Forward to Financial Freedom, there's some pretty funny stories about some of the stress that caused for the people around me, namely my wife. But I was never worried about borrowing money on credit cards because I always knew that was a good debt for me. There's good debt and there's bad debt, right? Kiyosaki's good debt, bad debt. And good debt makes more money than it costs. And bad debt makes, cost you money at the end of the day. I might have had $100,000 worth of credit card debt or $200,000 worth of credit card debt, but I had $400,000 and $500,000 worth of houses that didn't have any payments. And so I could have some time to breathe and manipulate them one at a time. So for the record out there, you guys, I have lived this life of using credit cards to buy houses. It does work. It goes against standard or traditional thinking. And at first time you hear this, you're going to think, oh, no, credit card debt's horrible. Don't ever do that. No. Credit cards don't ask any questions. Once you get approved and you have a credit limit set, you can go use that credit limit. They don't ask any questions. And you own the house basically free and clear because there's no liens on it. You just have to remember when you sell that house, call up the credit card companies and make sure you pay them off and just keep the difference. So I know you have people in real estate doing this because I've sent you a lot of those people. There's probably tons of them around the nation. But what kind of other companies are using you? You're not limited to real estate investors. I mean, you have other businesses use your services too, right?
Yeah, absolutely. I wanted to say one thing about the good versus bad debt.
Sure.
Any type of debt that you have, if it's being used towards an asset, and obviously an asset is something that makes you money, then that's good debt. Like you said, anything that's going to be making you money, that's going to be good debt. So it doesn't matter if you're using a hard money loan, if you're coming out of pocket with your own cash, or if you're using a credit line at zero interest. Either way, that debt is good debt because it's going to be providing you a return on your investment. So any way that you can leverage, you should definitely be doing that. And then
it's hard to argue with 0% interest, right? I mean, the credit card is the cheapest partner you'll ever have. It doesn't complain. It won't steal anything from you.
It doesn't want any equity.
It doesn't want any equity. It doesn't want part of your lifelong cash flow. It just sits there and shuts up and does its job. It does its job one time when it lets you take the money out. It does its job another time when you pay it off and it zeroes out. So it only has two things to do.
Exactly. And we find that the best way of building this equity is because we're obviously, as you know, we're big believers in the credit cards, but we like using the business credit cards. And I'm not sure when you were doing your investing, when you were at the point where you were using credit cards, Mitch, were they personal credit cards or were they business cards? Because there's a big difference if it's showing up on your personal credit report or not.
Well, mine were personal, and this is a great point. Mine were personal credit cards, and my credit suffered because of the way I was using these cards sometimes. I mean, they didn't really like what I was doing. The credit scoring system didn't like it, but it was good enough, and it got me where I was going, and I would have been better off or better served, but I wasn't smart enough to get someone like Fund and Grow to help me. And I don't even know that there was a Fund and Grow kind of company back then. This would be in the early 2000s or 1999, 2000, 2001, 2002. I don't think there was even someone remotely like Fund and Grow, was there?
I don't remember any credit card companies back then. I remember doing home equity lines. That was the big thing back then was everyone was getting home equity lines.
Yeah, I guess that has a place. I'm not a real fan. I like to keep my home out of that. But
absolutely,
just for some history, both Ari and Mike were doing mortgage loans way before 2007. They did over $600 million worth of mortgage loans, so they're not new to this money borrowing business. And then since 2007, they have put together over $250 million worth of credit limits for people. So these guys are not just trying this business on to see if it works. They really know what they're doing. So, Mike, tell me about the other kinds of businesses that use you, because I do want to cast a bigger net than just real estate, because there's got to be all kinds of companies that could use 0% credit cards or business lines of credit or whatever.
Absolutely. We have all different types of affiliate organizations sending us clients on a daily, weekly basis, and we have clients in the attorney field. We have clients who own an Amazon business where they resell different things on Amazon, so they need funding for inventory. We have just your standard brick and mortars, local businesses, whether it's like a landscaping business and used car auto dealership, really any type of business owner or real estate investor, obviously, like we discussed earlier, can use this type of funding. But, all right, do you have any other examples of the businesses that we work with? I'm just trying to think off the top of my head.
We have entrepreneurs that own multiple businesses where they may still even work a professional job, and they own an investing business where they may be generating passive income using certain passive income vehicles. So there's a lot of different ways to make money. And as long as you have a model to make money, you're going to need access to funding. You're going to want access to funding in order to expand that.
And we have a lot of clients also who are in the trucking business or the construction business. We have a lot of clients who are just looking for funding to start marketing their own brand so that they can start doing their own type of coaching. So
listen up, entrepreneurs. I mean, just because we're in the real estate business doesn't mean that I won't reach over there and buy a Corvette if I see one for half price, the neighbor across the street or something. So sometimes it's all about just being able to reach over there and grab the money to capitalize on a spur of the moment deal that you see. So
yeah, absolutely. And I have an interesting story kind of going back to of using your personal versus the business. And I have a house over by our office in Spring Hill here in Florida. And my neighbor over at that house, they've been flipping homes for quite some time now, for long before we had ever bought that house. So, we lived there for a period of time, and we met the neighbors, and they were really cool. They told us about what they were doing and the money they were making flipping homes. And the interesting thing was they were doing a lot of this using personal credit cards. And there ended up being issues where when their credit scores were depressed in between flips, when they were most maxed out, where they had issues where certain credit accounts had been called and interest rates had been jacked up, and they had certain kind of issues that came along with maxing out all of your personal accounts. And so eventually they broke down and they signed up with us because they know me personally, and they've literally received hundreds of thousands of dollars now that are completely not tied to their personal. So they can leverage the entire account without their personal scores being affected at all. They can co-sign for their son, who happens to be a bowling expert. This kid is amazing. He's all over TV down here in Florida. So they co-sign for a car for him and all that. And usually those kinds of things will hurt you. If you're completely maxed out on your personal, then you can't co-sign for your kid. You can't help them out when they need help. And so using your business credit, not allowing these accounts to show up on your personal credit, don't be fooled by the fact that they call it a credit card. These are business credit lines and can be used just as that when you use it properly and have it report to the tax ID of your company.
And you're even giving me ideas. I'm going to show up on your doorstep here in a couple of days myself, because when you start thinking about 0% interest and what you can do with that, I mean, imagine if you're a real estate investor, you can buy a house for $30,000 and you needed $20,000 for the repairs, but you could go to your lender, whoever that is, your private lender or whatever, and say, look, loan me the $30,000 to buy the house. They give you a first lien. Don't worry about the repairs. I'm going to handle that. And then, bam, you put your $20,000 of repairs on your 0% credit card. And number one, it makes it real easy to get a loan because the lender sees you taking some of that risk by paying for all the repairs out of your side of the equation. And this is a great way to raise private money, is to use these 0% credit cards to make your deal a no-brainer deal for your lender, if you're following me. Like if you have a house you can buy for $50,000, why don't you put up $20,000 on your 0% credit cards and just ask your lender for $30,000? And let's assume that this house is worth $80,000 to $100,000. So, you could buy it for $50,000, you put up $20,000 on your 0% credit card, and now you're just asking a private lender who you want to get to know, who you want to get your hooks into. You're only asking him for $30,000 on an $80,000 to $100,000 house, and you're going to give him a first lien. This is a perfect way to make a deal so good that anybody with money would be tempted to loan you their money. Because how can a private lender lose when they're only going to loan you $30,000 on a house that's worth $80,000 to $100,000? Well, you got that done because you had 0% credit cards, and you could put in $20,000 yourself towards that $50,000 sales price. So I know a lot of ways to use these cards to get private money and use your credit card money. The other upside to that is you got $20,000 you're not paying any interest on. It's your whole rehab. It's your whole rehab, and there's no draw process. Like you don't have to slow down and wait for the lender to come out and look at your job before he'll give you the next draw on your rehab budget. There's a lot of reasons in real estate to do this, and I love it.
I'm sorry for cutting in there. I just wanted to say, according to Bloomberg, 8 out of 10 businesses fail within the first 18 months due to not having funding. And so you can pretty much say that, if you're a real estate investor out there, if you're one of those 2 out of 10 that are succeeding, you are definitely using all forms of leverage available to you. You're not sitting around twiddling your thumbs thinking, like a deer in the headlights, should I not? You're definitely going to be one of the 8 out of 10 that fails. If you want to really move your business forward advantageously, you have to strategically use all forms of financing available. Obviously, you have to be strategic about it, and using funding that's not secured, that's unsecured, is huge. And you may not be able to get away with using unsecured funding for all aspects of your real estate business, but for the rehabs, for, if you're buying small properties under 100,000, if you can buy all of that and keep it all unsecured, then God forbid you're not able to make your payments one month. If you're unable to make your payments and you miss a few payments in a row, they don't take away any of your assets. They don't take away, if you bought company assets like a vehicle or pizza ovens, or if you bought a piece of real estate, or if you were doing a rehab, none of it is tied to any of the assets. So your assets stay intact, and those assets are what are earning you your income. So luckily enough, your assets and your income generation stays intact, while you may end up getting a bad mark on your credit report because you didn't pay the credit. So using unsecured credit is a much safer form of funding. And in the case that you do incur a late payment or something from one of the business credit cards, that can be deleted. You can get those things removed off your credit report. And in the past, I had a lot of derogatories on my personal credit report, but now I have scores that are over 800. And that's because I got those items deleted. And then I moved forward and built myself good personal credit by continuing to use it and paying everything the way you're supposed to pay it. But if the worst would happen, like what happened in 2008 when Citibank and Chase and all these big banks, they needed a bailout. They didn't get a big fat 30-day late on their credit report. They didn't get a 60-day late on their credit report. But if the worst happens, where just like in 2008, the banks couldn't pay it, if it comes where we can't pay it, the worst that's going to happen is you just get a late payment on your credit report. And they give you a period of time to get the account back into good standing, and then you can get those late payments removed. So using safe forms of financing is much more desirable than using financing where the investor could call the note, they could take the entire property if you're not able to pay the note, or there's other technicalities involved that if you don't make certain payments at certain times, certain balloon payments, you then end up losing the whole property.
Well, what a great set of people to have at your roundtable, Ari Page and Mike Banks. If you had some questions about that, you could call them up and say, I'm faced with this dilemma. What's the best thing to do? And then they tell you, and they'd be right on top of the game. And I'm glad that you mentioned about the time that it takes to close deals, because sometimes closings don't happen on our time frame. And so let me ask you this. Do you all have a success story of how people have used Fund and Grow in the real estate business? Do you have a short case study?
Yeah. Actually, one of my friends, his name is Seth Himrod. Well, he was a client of ours. He started, and Seth didn't even have great credit. His credit was kind of shot due to the whole 2007, 2008 debacle. But he did have a brother. His brother was willing to work with him. And his brother was a retired librarian, but he had fairly good credit. So he got started with us. In the first 60 days, he got $120,000 using his brother as his guarantor. So his brother, working together with him, created business funding that didn't show up on either of their credit report, got $120,000 that Seth was able to go out and invest with. Then he continued working in our program, where we then helped him fix his credit, and we helped him rebuild the array of accounts on his personal credit needed in order to have a good personal credit score. Because when you delete bad credit, you have to build back an array of good accounts. You have to build back some accounts to show that you have good credit. So we built that back for Seth. Then we moved forward and built him a business credit profile. So within that year period of time, between him and his credit partner, they billed $347,500. And again, I want to remind you that Seth's brother was a retired librarian. And so he had good credit, but he didn't have a lot of income. That was not what was needed in order to get this startup funded. And so now they have $347,000, and that was just on their first cycle with us. So they've since subsequently signed up again for a second year's worth of service so that they can build that even further. And his company is MW Realty Advisors, LLC. and they're just one of our clients. We have a lot of great clients, though. We have a lot of clients that are fairly big names like you, Mitch. We have others that no one's ever heard of, but they are highly successful in their model. They're selling a lot of real estate. They're doing investing. We have clients that are in a whole different variety of fields. They're not all in real estate. They're in all the different models, business models out there. We have clients that are making funding. We have one client, Randy Larkins, who actually Mike is personal friends with. Mike, tell us a little bit about Randy.
Yeah, Randy Larkins, he's out of, I think, Memphis, Tennessee, and he owns a used car dealership. He also owns a pawn shop, but he just, after working with us, he started to get into real estate investing, and he's been doing a flip every 90 days using the credit that we got him. We got him $180,000, and he's been doing a flip every 90 days. He's gotten more inventory in his car dealership. It's Blue Moon. Yeah, and his pawn shop, of course. It's Blue Moon LLC is the name of his auto dealership in, I believe it's Tennessee.
Well, so there's two great case studies, everyone. And I want to tell you, if this program costs $10,000, it would be worth it. And I'm here to tell you it doesn't cost $10,000. It does not cost $10,000. But if it did cost $10,000, it'd be crazy to walk around this world with all the opportunities that an entrepreneur can see and not have funds to take advantage of them. And to think that you couldn't make back $10,000 with a $50 or $100 or $120,000 0% or very low interest rate credit card would be crazy. In fact, it would cost you money not to have this kind of funding source at some point, because at some point there's going to be a deal you should have done and you would have done if you'd have just been ready. And because you hesitated or you waited, there goes $20,000 worth of profit on that house because you sat on a fence too long. And I've seen it happen, in houses, in like most great deals on anything. You can't make great deals in slow motion. Usually you have to move fast. There's usually some kind of back pressure. You don't have time to go ask the bank's permission and fill out all these forms and do all this stuff. You just need to cut a check right now at the title company or whatever.
That's a great point, and something that you just reminded me of is the negotiations process that we carry out for our clients. And I'm looking at Randy Larkin's credit gain view right now. And when he initially started with us, when we initially applied, the bank only wanted to give him a total of $15,000. It wasn't until after we did our appeals and negotiating process that we got him up to $180,000. So he went from 15 to $180,000 due to the negotiations process that we're talking about, which is us following up on the client's behalf with each lender that we apply to and getting the largest approval with each application. Because in many cases, the bank is only going to grant you a small amount when you initially apply. So you really need to follow that negotiations concept and follow up with each bank and request to get the largest amount possible. And that's something that we have a team here in Florida doing for our clients on a daily basis. They communicate with the bank. We have relationships with each bank that we work with. So it makes it a lot easier for them to connect with the decision makers and really get an approval that is actually going to be substantial for you in your real estate business.
Man, I was going to ask you for a success story in the credit repair. You just gave it to me ahead of time. Are you clairvoyant, Mike?
A little bit.
Hey, but I want my audience to hear me really loud and clear right now. Do not try to do this on your own. Don't go to the internet and buy a $10 or $50 or $150 course of how to fix your credit, because these guys are professionals. They know the algorithms. They know what these companies are looking for. They do it every day. Don't waste your time doing that. And if you're in the house business, then let's concentrate on finding more deals and making great deals and leave this to the professionals. This is one of those things you can delegate. And I enjoy a great life these days because I have learned the art of delegation. And you would never find me trying to fix my own credit, because that's not where I make my money. I make my money finding houses, putting them under contract for half price, and then selling them at a great profit. And you take some of that money that you make and you let professionals help you. And this is a perfect area. And one of the chairs that needs to be at your round table is right here. 0% interest funding, business credit lines that don't affect your personal credit. You don't have to ask permission. It's fast. I don't know. This has been a great conversation. I don't think we need to drag this out much longer, because if you haven't gotten the point by now, guys, you're just not going to get it.
Well, Mitch, one thing I did want to insert real quick was that there's probably some people that are listening right now that are thinking, well, I've gone and tried to get this on my own and I couldn't get it. So this is all bull hooey. And I just want to speak to those folks for just a minute, because positioning is a really important aspect of what we do. Making sure that someone really qualifies for this before applying. And remember, when you apply with the bank, you're kind of establishing where you're at. I mean, they're going to hold on to that application for at least 6 months, maybe a year. And so you really need to fix all of that ahead of time. And we're not just talking about credit repair, because there's some people that are listening right now that say, hey, I have good credit and I'm not getting access to $250,000 of unsecured business credit cards not on my credit report. And I can go through a whole list of reasons why. There's many reasons why. The capital acquisition process, there's many different bullet points that we have to go over on your credit report to make sure that you match and qualify. And guess what? All of these things are items that we can perform for you to make your scores go higher. We're not even talking credit repair now. We're talking merging like accounts together. We're talking about updating mortgage seasoning, because one mortgage bank was bought out by another mortgage bank because of the 2008 debacle. And so a lot of these banks that were bought out just reset the seasoning because they only held the mortgage for, if they just bought out the other bank, they reset all the seasoning of all the mortgage loans they just bought. I could go down a whole list of items that we see commonly on folks that have good credit scores, but these are unbalanced ratios and items that have to be updated and addressed. Sometimes it's as simple as the employer, where they have mismatched employer and address information, and you kind of laugh at that and say, this is why they're having a hard time with fraud, and the bank doesn't believe who they are, and they have good credit, and they're just not getting approved, and they don't know why.
And if you Google it, you'll find articles about the millions of Americans that have all this inaccurate data on their credit report. It's hindering their scores and disallowing them to get further credit lines or further mortgages. And it's just inaccurate data on the report. So that's what Ari's talking about. We help you guys correct that stuff before applying so that you get the best results possible.
It's incredible stuff. Like I said, I'm going to reiterate. I've bought houses and made deals on my credit cards, hundreds, and that's how I launched my career. I know students. We have over 90 students, my students, that have gone with Fund and Grow. Some of them were able to start out right off the bat because they had good credit scores and start getting lines of credit. Others had to work on their credit, and I know the success stories in the pile there. There's been numerous people go from credit scores that weren't worthy to credit scores that actually can get the job done. What is the credit score to get the job done? Last I heard it was around 720. Is that right?
If you have a 720, then that means that we can move forward right away, pretty much.
Okay.
But if you have below a 720, then that doesn't mean you can't be helped. Just like, do you remember like Seth? Seth received $347,000, but his credit we were unable to move forward on. And even his credit partner, it still took us 2 months to move forward on the first batch, but then we got over 100,000 on the first batch. So the positioning can take time. For example, with Seth, and within that specific situation, the credit partner, there were items we had to update. So when we update those items with the bank, it takes 30 days for that to update with the credit bureaus. And we're dealing with 3 credit bureaus. We're dealing with a variety of different banks. Sometimes one of them won't update it that month. We have to wait another month. Either way, when we update your report, we then have to wait the 30-day cycle for it to update. Now, we could do a rapid rescore, but a rapid rescore would put more inquiries on your credit report. So we are trying to remove inquiries, consolidate, merge accounts together, remove any accounts that have short seasoning, merge the older accounts into the newer accounts so that we have longer overall accounts but less overall accounts. And what we call this is killing codes. We can affect these specific codes that we know will hurt you the most. They are the codes that the underwriter's asking about when our people are doing the negotiations for you. And you remember how important the negotiations process is. That's where we're really taking their situation, wherever it is, after we've already enhanced it and we have applied. We then take it and we try to enhance it even after the application. We call and we explain, well, this is why this is the way it is on my report, and that is why that is the way it is, and this is what my business model is. This is why I'm a good bet. And when that underwriter, they have the ability to decline you, or they have the ability to approve you for a $75,000 account. The underwriting on business credit cards is completely different than the underwriting on a mortgage loan, on a secured loan, on an auto loan. All those loans are highly regulated by the government. These business credit cards are not. And so they're a preferred way that the banks are getting money out. We keep a close eye on the beige book that the Federal Reserve puts out every quarter. And so they put out 4 of the beige books every year, once per quarter. And in the beige book, consistently over the past, I believe it's been 10 or 11 quarters, they have consistently shown that credit cards and credit and unsecured lending has outperformed auto loans and mortgage loans. Wow. That's right. Wow. There is more credit card and unsecured lending going on than even on mortgage loans. And so that's a shocking statistic, but it also is telling us that the banks really like giving out money through unsecured funding, through this credit cards, because they're not highly regulated by the banks or by the government. Also,
the other reason is that it takes less employees to approve a credit card than it does to approve a business loan or a business line of credit, because there's a lot more verifications, there's a lot more documentation that they need before they can approve it.
There's simply less regulation, which makes it cost less for the banks to implement.
Exactly.
Okay, so let me tell the folks out here how to get to you. It's 1000houses.com/grow. 1000houses.com/grow. That's 1000houses.com/grow. GROW. And that'll be a little intake form there. You fill it out. It's real simple. And you owe it to yourself just to get an initial consult of what might be possible. And don't pigeonhole yourself. No matter what you think, you owe it to yourself to get a little consultation with Fund and Grow and see what the possibilities are. Because believe me, you have no idea how many options there are for you. And they're going to tell you about those options. How long does it take, Mike, by the time if someone comes to you and they say they're going to go with your program, how long does it take before they start getting funding? Let's say they have a 720 credit score and they're ready to hit the ground running. How long does it take to see some results?
Typically within the first 30 days, sometimes within the first 2 weeks. But within the first 30 days, our clients are receiving between $30,000 to $150,000. And for the clients that bring a partner into the program with them, they can get even more than that in the first 30 days. So the 720 and up, they're looking at about $30,000 to $150,000. And that varies because everyone's credit varies. Some people are going to have larger credit cards on their report. Some people just started using credit. So those people are going to need to add a little bit of strength. And that's something that we help them with as well. And so if a client has below 720, we also have a solution for them. It's called Kadam Credit Help. It's our credit repair company who will remove their negative items, whether it's a late payment, a bankruptcy, foreclosure, lien, whatever it is. Our credit repair team will remove those items so that in the next couple of short months, they'll be ready for us to start applying for the business credit lines for them. And also they have the option of adding on a partner so they can bring in their spouse, family member, business partner, and that will allow us to get them immediate funding.
And to be succinct, what all that will provide for anyone that joins us is we provide up to $250,000 of the 0% business credit cards. We show you how to cash out. We also provide $100,000 of the non-recourse corporate credit, which we haven't really talked about on this podcast. So we also help out the client with the formation of a lendable entity. And when I say help out, we set up a entity for you at no cost. There's no ongoing cost to this entity. And this is set up so that you're most lendable. In some cases, we use the client's existing entity, but we go over that with the client when they get started. Then, of course, we're going to help them remove the cash off the cards without doing a cash advance. And we're also going to help the client remove credit inquiries off of their personal credit report because sometimes inquiries can be incurred through this whole process. So through the 12 months of one-on-one unlimited coaching, you're going to build up to $250,000 of this type of funding. And we have some bonuses that are laid out, and you're going to see them on the website. Once you go to the link that Mitch mentioned earlier, you're going to see the bonuses that we have for anybody who's an action taker. If you're an action taker and you want to start making this make money for you right away, then go ahead and put your information in. We're going to have one of our associates reach out. As soon as you put your information into the website, you've locked in all the bonuses should you get started for the program.
Yeah, be sure you use that link. It's reinvestorsummit.com/grow. That's RE as in real estate, Investor Summit, SUMMIT.com/grow. And make sure you owe it to yourself to get a consultation. You have no idea And this could be the difference between doing all right this year and really making some great money, because you're going to be able to take advantage of opportunities and not have to ask permission, not have to go find partners, not have to fill out a bunch of paperwork and wait till the deal's dead or cold. You're going to be able to move fast and grab your deals. You know, you can't steal houses in slow motion. That's what they say. All right. Well, Ari, Mike, I think we're about at the end of our time here. So I really want to say thank you, and I appreciate you guys taking the time to come on. You've been a really big blessing to me and a lot of my students, and I wanted to have you on the podcast.
Yeah, thank you so much. I just wanted to throw in there that we're really excited about it's close to $6 million now of funding that we've created for your pool of clients so far. For the clients that you've sent us,
yes,
we've generated almost $6 million in funding.
Yeah, that's true. And it has changed a lot of people's lives because, you know, in the beginning, it's tough. And that's where, like you said, the rubber meets the road. I mean, if you're going to make it, you got to make it through the first 18 months, the first 2 years. And it's hard when you have no funding and you're running around in a panic all the time. It's also very stressful. And this takes a lot of that stress out of it. So, again, thank you very much. That's reinvestorsummit.com/grow, GROW. All right, you guys, have a great day, and we look forward to hearing some more case studies maybe in the future, huh?
You've been listening to the Owner Financing Master, Mitch Be the Bank Stephen, on the Real Estate Investor Summit podcast. Let us now blatantly, and without apology, bribe you towards financial freedom by offering you a whole bunch of free stuff. Go to reinvestorsummit.com and get you some. And you all come back now, you hear?